Mica, first of all, thank you very much for joining me
Good
today.
morning.
Um, it is a beautiful morning. I'm still in Boston, so it is a lovely morning. It's been beautiful for the past few days, which means that soon enough, from the 80s, high 70s, we're going to drop to the 50s, if not below. Where are you based?
I'm in Bolivar, Missouri. So a lot of people actually know this location. It's central Missouri, down by close to Branson. But in the insurance industry, what it's most famous for is the fact that a mile down the road from me is the used to be the headquarters and the birthplace of Duck Creek. So
No
yeah.
kidding. I did not know that.
So yeah, it's a very
Yeah.
interesting, very small town, 10,000 people, and people flying from all over the world to come to Bolivar, and they get here and they go, "What the heck is this?" Out in the middle of nowhere. I mean, it's not Boston, it's not LA, it's not San Francisco. But yeah, Vertafore used to have a location, and that's where I got my start, is in
Hmm.
1990. So over 30 years, Vertafore had a location here. They did what's called comparative rating. So a lot of companies like Silver Plume, or not Silver Plume, but PL Rater from Vertafore, Turbo Rater, EasyLinks, etc., copied that platform. But I got to work and learn the industry. I did a comparative rating platform for ISO Verisk, which sold for $50,000 per CD at the time in the 90s. But I got to see the black boxes of Farmers, State Farm, USAA, Progressive, Geico, Hartford, Travelers, Auto and Home. I got to see everything, all their secret sauce, work with all the underwriters, get it right. We delivered it out to the to the carriers, and they were able to batch rate for their market segment placement. So that's how I learned the industry.
And you've been in the industry for 30 years, but that was in the
Mhm.
90s. So what happened in the 2000 and 2010, and now we are already 3 years deep into 2020.
Well, it's very interesting because a lot of people, a lot of startups now are coming into the InsurTech world, and they're like, "We're doing this. It's brand new." I saw somebody that was saying that they did pet insurance the other day, and Vertafore actually did InsWeb in 1998. A lot of the things like we had comparative rating commercial, so you could do BOP, fire, theft, I don't know, CGL, etc., along with auto and home back in the 90s. We are
Hmm.
just now getting to the point where agents are able to do that again in the same fashion. We used to have a much deeper penetration across the insurance industry in the United States, and Vertafore at one point. So the reason I went out on my own in 99, the reason that the Duck Creek people went out on their own in 99 is they had a change in leadership and a change in philosophy and platforms, and they killed all of their comparative rating platforms for about 5 years. And then they struggled to find another one. And so the industry is it's interesting. It's like history. It's recycling back. And so we see a lot of platforms now trying to do those same things that we did very well back in the 90s offline with this. We mailed
So are
we
we?
mailed diskettes out, by the way. Lots of diskettes.
So talking about going the circle. So are we back to compare websites? Is that the main thing? Hey, I have this engine that can compare the different policies and let me tweak it because you're a paying customer, so you will always be on top as the cheapest one.
Unfortunately, the reinsurance market, quantitative tightening, everything that's going on in the world with the stock markets, the bond market, has put the insurance companies in a situation where they're all raising rates. Minimum this year, it's a minimum of, well, in the next 6 months, minimum of 15%. So, yes, what is happening is people are, if they took one of the variable loans in the last 3 years that came out with COVID, they're getting their renewals. Some of the commercial payments are doubling, right? So that puts a lot of weight on the insurance price as well. So when we see mortgage payments rise, we see insurance payments rise, people price shop. It's just a fact of life. And so agents are looking for ways, they're looking for markets. That's become the most difficult thing, is to find the markets where they can place this. More and more going to E&S markets. And so comparative rating has become extremely important for agents. In our system, they actually have a quote with, we have a situation now, my local company, which I have my home with, they are went into state rehab, and then it was taken over October 1st by another company of mine, another customer, and we are in the process. So we turned off new quoting for that company, but the agents still have the quote stored, and they can roll that into one of the other companies. They can either roll it into the acquiring company, the merging company, or they can roll it into one of the other companies without any extra keystrokes hardly. So they don't have to re-enter the information. So the comparative raters right now are extremely important to the agents because of the book rolls that are going on. I know agents that are doing 5 book rolls right now at a time, and they don't have enough staff, they don't have enough time. They're doing interesting things like going through and prioritizing by premium. And so if you're the lowest premium customer of an agency, yeah, you may not get rolled. You may actually get canceled because they don't get to you. 150 companies in the Midwest right now are without reinsurance because of the market situation.
Should we call it the Vestus situation, or is it only the market and the squeeze on the reinsurers?
It's mostly because of the squeeze on the reinsurers. So the capital markets that loan money to the reinsurers are waiting. So in the past, a reinsurer would have $1 billion. They would leverage that to get $4 billion, and they would go on the market with $5 billion worth of reinsurance. Last year, they went to the capital markets and they got $3 billion. This year, the capital markets are saying, no, wait, we may not give you 3, we may give you 2. So they're waiting to see what happens in the stock market right now, and whether the Fed raises the interest rate. And right now, I mean, 5.5 money market rates are really affecting a lot of people. But the reinsurance market is now being told. So in the past, they would go to PCI or NAMIC or these conferences and settle their deals. They would sign their reinsurance contracts mid-October, say. But now they're being told you have to wait until November or December to find out if you have a contract and at what price. And so that's making all of the insurers very, very nervous. A lot of them, I mean, there's a lot of them that are going to be told that no, that they don't have reinsurance, and December 1st they're out of business, or January 1st they're out of business, just out.
So if we're going up the chain, because it started with agents, then you went up, talked about the carriers and the impact on the carriers by the reinsurance and how that's affecting already the agents, and as a result, why people don't get their policy renewed. If you are looking at the capital market and that impact on the reinsurance, we all know the ILSs, how the capital market and the interest rate actually impacts the reinsurers.
So the M2 money supply is the worst since 1933. The LEI is the worst since 1946. So if we actually go back further, probably the worst ever. The bond market, the 3-year bond market, is the worst since 1788, since we started issuing it. Interest rates are going up. What that means is the capital markets, along with all of the stuff going on in Saudi Arabia and with BRICS. So Saudi Arabia is now doing deals, not for dollars, which is a new thing. The BRICS are dumping dollars. And so we're seeing a lot of pressure on the dollar. We're seeing quantitative. So years we had quantitative easing, which was like crack cocaine for the capital markets and reinsurance. And that made us dependent on cheap money. And now we don't have cheap money. So with 5.5%, the capital markets are basically saying, yeah, we're very, very nervous about what's happening right now. So the thing that's happening right now is the October-November stock dump, which has started. We dropped 1,500 points on the New York Stock Exchange in the last couple of days, and it's expected to continue. So the capital markets want to hedge their bets. They're like, yeah, we want to help you out, but we just need to wait and see what happens. And so that means that the carriers are having to wait, but they're also being told at the same time. So we have 10% inflation. We have 5% increased capital loss of risk. So the minimum For a company that does very well with their loss ratios, the minimum price increase that we will see is 15%. So no matter if things just stay the status quo for a company, they're profitable, everything's good, the reinsurer makes money, it's still a 15% increase. And then when you add in losses and additional cost of money, depending on what happens, we're looking at 25% rate increases across the board mostly. And that doesn't begin to take into account the wildfire and the situations in Florida. So for those markets, expect 25 to 50%.
So besides solving the problem of macroeconomics, starting the usage of yuan or RMB and shifting in terms of the availability of the US dollar, what can be done? Especially when we are looking at the agents who are the only owners of their own fate. So they need to think about, okay, this is kind of falling on me from top. What can agents do about that?
Agents really don't have a choice other than they need to find E&S markets for certain risks that they can't place very easily. They need to find new carriers that are coming on the line, and there are some new carriers coming in. We're seeing this in Florida with somebody just took 100,000 policies. So there are new risk channels for these agents, but most of the agents are not being very successful in finding them, and they're very, very picky right now at doing new appointments. So what I'm hearing from a lot of agents is they just don't have a place to put these people. And like I said, they're the ones on the lower end of the spectrum where the agent doesn't take the time are probably going to get canceled. But that's not, for the agents, that's not entirely negative. And the reason why is with the increased inflation at 10%, what we're seeing is their books are undervalued by 20 to 30%. So when they are doing these book rolls or changing them over, if they do an insure to value, they're getting an increase on property of coverage A, like 30%. We're seeing increased value on used vehicles. So they could lose 5% of their book and still increase their total book value by 5% or more by rolling everything, which they probably should have been doing all along. They should have been keeping up to date with their book values.
Well, as much as I would like to jump into inflation and what does it mean for the average Joe, because this insurance has utility. It's like, oh, I need to pay 30% more for my home insurance? Do I need to pay almost 100% more for my car insurance? People don't care about all the things that we mentioned just a minute ago. For them, it means that life is going to be more expensive. Now, we understand that we need to burn all the money that came by all kinds of printing money and the inflation that was created, and slowly there will be the pendulum and things will balance up and all the oscillation in the market will reach a certain new steady state. But until then, there will be frustration and all kinds of impact on the day-to-day life.
Absolutely.
Now, for agents,
so
they are the must.
It is imperative, absolutely imperative. So I ran an insurance company this year for 6 days when the leadership walked out, and one of the one of my customers, the one that was actually merged out, so they had problems. And by the way, they had Acrisure, which uses Best2, so whole different topic. But I had to communicate.
Different topic. We are not going to touch Best2 today. It's very interesting. That's the drama that sadly keeps on giving, but it still has an impact on the things that we do on other businesses, and as we go, we see more and more on that.
It had an impact because
but we're going to mention
this company had to make a collection, so it had an impact on them. But one of the first things I had to do was communicate with the agents, and I used ChatGPT to draft a very nice letter to the agents. And agents should be doing the same thing. Communication is extremely important at this time. So I think once people understand, they have a conversation with their agent, or they get a letter, or they read something that says, hey, look, inflation's at 10%, increased cost of capital is 5%, we're going to have some problems with reinsurance and the rates. They're going to move up because of everything that's going on. People are like, oh, yeah, that makes sense. I understand now. I don't like it, but I understand, right? The problem is explaining to somebody who's on fixed income in Florida in a low value home, say one of a mobile home or one of the older homes, a couple miles inland. They're fixed income, and their mortgage doubles when they get their renewal, right? How do you?
Ooh,
Yeah,
wow.
it's doubling, right? Because the insurance is going up. They're on a variable.
Yeah, the
Yeah,
mortgage,
so everything's bad for them,
insurance
right?
on the
So
mortgage.
those people are having to sell and actually move. A lot of people are on fixed income. This is affecting them hard. But it's imperative that the agents communicate, because you don't want to have that happen to them and then them put in a situation where they can't even afford to sell their home. They're just out, right? Communication, communication, communication. So in California, you can make sure that you're up to code, up to current code, even if your house was built and it was older. So the fire screens on the vents, putting a metal roof on. The companies like metal roofs, good metal roofs, so thicker gauge, not thinner gauge. Um, Making sure that you keep bushes away from the house. So making sure your yards are mowed, there's not full of leaves. So that's what you can do in California. So we're seeing policies in California be canceled because they haven't taken these steps. So some simple steps. The big one that people seem to keep forgetting is credit score. Make sure you're on time with your payments. Make sure you got a good credit score. It's probably the single most important factor besides claims. Don't make small claims. If you've got a claim that's like $1,200, $1,500, fix it out of pocket, do it, get it gone, don't turn it in, right? Moving to a minimum 1,000 deductible, 2,500 wind hail is probably the minimum that everybody should be at right now for cost. And most of the companies are moving that
Hmm.
way. So if you're not there now, you will be. A lot of companies are going to 2% wind hail. So in the Midwest this year, we had, in the space of 6 weeks, we had 8 named storms. So in Missouri, where I live, it looks like half of the houses were their roofs were replaced. So there are things that people can do to make them more acceptable and to get a better price.
Okay, I need to stop us because we are already 20 minutes in, and I only asked the warm-up question, and now I need to ask you the second question, which is, so Micah, what do you do? Tell us a little bit about your current practice. Because we went, yes, you started in the 90s, and then we went off script to talk about interesting things, numbers, which I love numbers, because that that really explain how insurance operates, right? Those are the numbers. Oh, it's 15%. However, there is that implication. Now it's a 13%. Let's talk about your background and what you're doing today. Forget the background. What are you doing today?
Today, so we're moving fully into the cloud. We're in the process of a cloud move, and it's not a fast move. So we have what we call our,
Who are we?
what's that?
Who are we?
So my company and the
What's the name of your company?
agency insurance services. And then we named it that because we were initially serving agents with comparative rating. We did that quite a bit. We had over 100 companies of auto in Texas written and served TDI, the Department of Insurance, and that kind of deal. And that was internet-based rating. I believe we were the first internet-based comparative rater on the market at the time. So we call that our legacy platform because it's on-prem. We are moving to the cloud. We've been moving to the cloud slowly since 2015. We decided to make the move to the cloud. I hired a fellow who was head DBA at Compaq. He was head DBA at Digital Equipment Corporation. And then he was also with me, and it was head DBA at when we built hotels.com. It was the only startup I know of to make $1 billion in sales in its first year. So disruption. We end, yeah. So disruption means numbers. We Within a few years, like 80% of travel agents were out of a job. because people decided that they liked online travel, and they just liked travel agents so much that people used to have this thing. It's like, I won't use my credit card online. I don't trust it. I won't use it. They weren't encrypted. They weren't secure. They were all the time getting stolen. And so hotels.com was actually this thing. It's like, my frustration is so great with travel agents, I'm willing to use my credit card. And that was like a key turning point in the internet for the US, because then people said, well, maybe I'll use my credit card for Amazon. Maybe I'll use my credit card for something else, right? It became a trend of using a credit card online, because prior to 2002, people didn't do that. So anyway, Craig was with me at those places, and we sat down and we said we wanted to design a new platform for the internet that would be safe, data safe. It would encapsulate a lot of the things that we did at Accord. So I participated in the model design of AML for Australia and South Africa. And then I worked with the PCXML1, and I also I created and helped design, led the team for Accord 2 and Accord 3. Accord 3 is what they're currently pushing, and it's based on our model, our data model, which we call our InsureCrypt model, because the data is encrypted at rest. So not all of the data, but the pertinent data. So think about it this way. If somebody were to walk in and actually stick a thumb drive into our server, which they can't because it's an Amazon, but if an Amazon person did it, if they did it and they walked away with that, it would not be a data breach. And I think we're the only ones who can make that claim. So there's a number of things that we're doing there. So we are storing data in the blockchain. We are encrypting the data in the blockchain. And CNA had a hack on their policy system 2 years ago, March, and they have still not released what policies were actually breached. So, and the question there was, did they breach the cyber policies? That would be the really interesting thing to know about CNA. But I think out of all the systems that are out there right now, so this is a policy admin system for carriers. Out of all the systems that are out there, we're the only ones that have blockchain, encryption, point in time, fully API in the cloud. And there's a number of other features there. It is a private blockchain. So 2 types of blockchain exist, private and public. People are familiar with public. Public is where you don't trust, right? No trust. So we see the verification on like Bitcoin that can take a day and a half to settle. Private blockchain is where you know who the individual is. So we don't do verification. We have trust. So public, no trust. Private, you have trust. So it's very fast. Our blockchain store the data, execute in 300 milliseconds or so, as opposed to a day and a half. So,
Wow.
So we're building out our blockchain system in the cloud in Amazon. We're doing it serverless. So that's another key point, serverless. A lot of organizations, one of my friends is moving their insurance organization into Azure, and they're paying bills of over 10 grand a month. Our bill right now to store the data for 30 insurance companies, and nobody will believe this, but it's less than $200 a month using serverless.
Okay. Let's hit pause here, because you mentioned a few things. So first of all, let's deal with 2 technical things. Let's start with the easier one. What does it mean, serverless?
So serverless means that you're not running containers. Basically, you're not having a server that is sitting there running 24/7. So most people, they go to Azure or AWS, and they get what is called an EC2 container, and they spin it up, and then they use Kubernetes to cycle on load. So some people come in the morning, and the load goes up to 50%. They add another server, another container, add another container, and then it goes down. But there's always containers spinning and running. There's always developers running beta instances for testing, right? There's QA instances. There's you name it. There's all of these instances running. and they're running all the time. Oh, that's dedicated hosting or dedicated containers or servers, and it costs a lot of money. It builds up really fast. In serverless, you have those, but they spin up on demand. So the first time you hit a Fargate container, which is a serverless container in Amazon, it spins up, it comes out of storage, goes into memory. If you don't use it, it goes back into storage. But if you use it within a few minutes or so, then it stays in memory and it's very fast. So the first spin up there's a time cost to the spin up, but the savings is in the fact that you're not managing Kubernetes. You're not spinning up containers and taking them down and having them running all day. So your cost is a fraction, like 1% of using non-serverless containers like EC2.
What is blockchain?
Blockchain is one thing and only one thing. If anybody tells you any different, they're selling you snake oil. Blockchain, you're smiling. He already knows the answer, and it's audit.
It's
audit.
No, I'm here to ask questions. If I know it, I don't know I'm here to ask questions, and from time to time to throw in my opinion.
So audit, the one case is audit. So is the data valid, right? And it doesn't have to be stored in the blockchain. So that's a key point. But is the data that you're referring to, is either the data or the signature of the data, is it valid? So there is a lot of use cases around validity of data. And that is, so when people say that they're going to do this or that, and they don't mention audit or the fact that they're really looking at, is something valid? Is it as it was stored? So the reason that Bitcoin is so important is we have a no trust environment where we can say we have a Bitcoin signature that is stored in the blockchain. Is it valid? I want to spend my Bitcoin, and it goes in and it verifies that. So the way that it's used today, the most significant way, and I see courts going to this as well. So some of the courts are starting to store their signatures of their documents, their signatures of their transcripts in the blockchain, so that they can come back later and say nobody has altered this, right? We are using it in a way so that we can, when we store we have inspections, we store photos, we have documents, we have apps. We had an app a while back where an agent turned it in, and then they altered it with whiteout, typed over it, and the agent's cousin had a fire and claimed it. And we were able to say, hey, look, this is not the app. The agent has altered the app. They've changed the effective date. So in insurance, being able to prove that things that are valid as they were originally created, it allows us to take that to court and very easily explain to the court, it was in the blockchain. We can prove that it has not been altered. We also have electronic audit. So for us, we can just push a button and verify our different silos of data. It runs in less than a minute, and it verifies that all of the data is either valid or that it's been altered. So, of course, we've never had any altered data yet, so thankfully. But another important point along with that is with the audit is I actually saw a startup and they were storing medical images, so up to 2 gig. They were actually putting the images in the blockchain. So every image they added to the blockchain added 2 gig to the blockchain when they added these images. And I tried to explain to them, no, you store signatures in the blockchain. You store the image somewhere else in a storage. You take a signature that the signature is what you store in the blockchain, and they didn't get it. And people still don't get that today. So you can store data in the blockchain, like Risk Stream at Thought Leadership had an article that came out yesterday, and they want to store accident data in the blockchain. Okay, well, data is fine. But when we get to reports, pictures, transcripts, we store signatures of those items, not the actual items.
Okay, I will not comment on that because it's something that was already cracked more than 20 years ago in terms of recognizing images and forget compression, but how do you do a quick search over the internet, look at Google image search and all the others, or trying to find if this is a copyright violation. It was done. I don't understand why they actually placed the image on the blockchain, but let's move on, which basically I just commented on something that I didn't want to comment. So blockchain, basically, it's a database protocol. It's secure. It's almost impossible to well, not to break, but to create a fraud there. It gives you transparency to everything, and the most important part from the business standpoint, there is an almost instant audit.
Close. Much.
Now,
So for
yeah.
insurance companies per se, they'll do an audit, and it takes a couple of weeks to do the audit, because the big thing with an audit is control. Who has access to the data? What are your procedures for changing that, and then validating those controls? In a blockchain, that all goes away. The blockchain takes care of all of that. You have a signature. You know who was the one who put the data. We can even track. We even track in the blockchain who got the data. So we store a document, but then we also store who accessed the document in the blockchain. So you can't erase the fact that so all this stuff you see in the movies where people, who did this, who accessed this file? Yeah, we have that.
Yeah, but isn't that, if even with a central database, can't you just log every time someone logs in and enters that information or access it? You capture who accessed that piece of information who was the last one to access it?
So that's not actually the way the systems are built. So when you look at the policy admin systems that are out there now, and you look even banking systems. So we have Jack Henry just down the road in Springfield, Missouri, traded on the stock market. I don't know how many regional banks that they have. They have a lot of them. These systems are designed the same way. So if you're coming in.
Oh, so basically it was bad design. Originally,
Yes.
The design was bad.
Right.
Okay.
So they have designed systems where there is no great wall of China between the data and the system. So because of that, users who log in, yes, that's tracked. But if you're a system administrator with no great wall between you and the data, the system administrator can go in, they can copy the data, they can download the data, they can manipulate the data. This is the problem with audits. Is audits have to go into who are these people, the super admins or the gods of the data that can have access. So what we do is we actually built a firewall. So Amazon is basically a firewall between the admins in a company and the data. So even the admins can't access the data and directly query it and download it without being tracked. They actually have to go through our Amazon protocols to get to the data.
So beside cracking the joke, that famous last words, pseudo something, what other applications do we see in the insurance industry that can use blockchain? What other use cases, and what does it mean from the business side? Because apparently my pseudo joke didn't work.
Sorry. So the biggest thing is audit. We come back to audit. So companies have this problem. Who has access to their data? Has it been changed? Has it been altered? Are documents original and valid? And being able to take that to court and prove that, being able to do a trustworthy audit of your data. So knowing that the policy information, the premium, claims information is valid as it was stored, and to be able to regurgitate that later. So one of the side benefits of blockchain is that data is immutable, right? So in that case, what that means is once you move your data to a blockchain, you automatically have a point-in-time system. So one of the things that we saw with one of the big vendors, I won't name, who got their first contract in Canada a while back, they have gap accounting in Canada, which means you can't alter the data. So you can't go back and change records. So that was a huge deal for them because they don't have a point-in-time system. So how do you alter a record when a coverage changes, they were actually changing the record of the coverage, which alters the data. But when you go to a blockchain, you can't alter the data. So that means every piece of data that's entered is new and unique. So when you change a coverage, there is a new record. When you alter a policyholder, you alter an effective date. When you alter a coverage amount, all of these things are new entries, and that becomes a point in time system. From an audit perspective, that means if a company that has $10 million on July 1st on their Q2 report, they run the same Q2 report in January, and now that Q2 report says they have 10.5 million. This is where the auditors come in and they run these reports and they say, well, okay, where did the $500,000 go? It's really simple with a blockchain and a point in time system. You say, okay, I want to see all of the transactions that were effective before July 1, but were entered after July 1. And immediately you come up and you see $500,000 in transactions. And the auditor goes, yes, there were $500,000 worth of corrections that happened after July 1, but were effective in Q2. And so a point in time system tells you that and makes audit a lot easier. And it's all done electronically.
And let me ask you the last question that I'm asking everyone. So we'll be very cautious about our time. Do you have any advice that you would like to give the audience, something that they can use if it's, for personal growth or professional growth?
Read.
Or just a good movie.
Read at least 30 minutes a day. Subscribe to the Business Journal, Artemis BMS, the Reinsurance Journal. There's a number of thought leadership. Subscribe to all these sources. Read them. Things are coming out. They're talking about things. So my local company, I went to the president of the board that I was running, and I said, "We've got these claims. We've got collections. The broker is I won't repeat that who they were, but I said, did we have this particular ILS or whatever they are on the paper?" And they didn't know. So read, no. She didn't even know that there was a problem with this particular reinsurance avenue because she wasn't reading. So 30 minutes worth of reading on insurance every day will change your perspective on what's going on in the world and be much more knowledgeable. I'm just amazed because I showed up at an insurance conference a couple of weeks ago, and directors of these companies had no idea that we even had a money supply problem. They showed up, and when the reinsurer said, "Hey, we're going to have to wait until December to give you a quote," they were just shocked. They were like, "What's going on?" And that shouldn't be that way. They should read.
Any plans for ITC, and who should reach out to you if they're going to attend that ITC and want to meet you?
ITC, get there early, get your sleep, eat your Wheaties, take lots of vitamins, exercise, because it is a marathon. It is, for me, we're doing API-based rating, so we're taking our comparative and exposing it via API. We're looking for startups, carriers that need API-based rating that want to be able to move from paper-based rating, so MGAs that are taking applications. We can take you and allow agents and brokers to get those quotes immediately online. We're looking for that. When you go, also take a pen and paper. So the ITC app is out, and one of my friends, it's out. And one of my friends has already started encountering errors. So make sure that you write all your meetings down, who you're meeting with, the meeting table. What we experienced last year was the fact that the meetings feature did not work. So you could sign up for a meeting, but when you actually got to go to the meeting, so 30 minutes before the meeting, you're like, I have a meeting. And you go to the app, and the app's not even responding. The meetings part of the app was dead. It was down. It was overloaded. I don't know. It didn't work. But anyway, errors are already occurring in the ITC app, and they think it's perfect. So take a pen and paper. Make sure you're prepared to go old school. Make sure that you come and be ready for a marathon, because that's what it is. If you're going to get the full amount out of it, don't go to shows, don't gamble. Be prepared to meet with people and set up those meetings ahead of time. Your best meeting day is going to be Meet Monday. Your second best meeting day is going to be Tuesday. It takes a full day to go through the exhibit hall, and make sure you do that because you'll miss something. And that's my advice for ITC.
I think that hydrate, and make sure that you have comfortable shoes. I do an average 20, if not 30,000 steps during the ITC. And it's Monday to Friday. I know people who will come in already on a Sunday, if not earlier, for other meetings. This year, it's going to be so big, and it's already broken to all kinds of sub-conferences and summits. And I know that Halloween is going to be a big disruptor for those with small kids. So most likely we'll see you only on Tuesday or Wednesday. But, be there, because it's an important part of the industry where we have an opportunity for at least 15 minutes meeting with someone. Also, link your calendar, so the app, to your actual calendar, and see how you can, because it used to have a good link to the Google Calendar, but we'll see. Anyway, Mica, thank you very, very much for joining me today. It was a pleasure talking to you. I know that we can continue talking, especially digging into the past and why these numbers impact those numbers, and what was the relationship between that regulator to that regional insurance company, which frankly, that's the most important and the most interesting part of the insurance. Those small relationships, and how a butterfly, beating their wing in Missouri impacts someone in California. Thank you very much.